Good morning. How's everybody doing? So when Carlo approached me to speak with Ted, I was, had a few questions, and basically, my job is to warm you guys up. And being familiar with finance folks, I recognize that's not that easy, but I'll do my best. So my name's Jason Webster. I work with Archetype. We are a management consulting firm focused on finance. We do a lot of work around the budget, which is kind of my interest in this topic. So we work with a number of tools, large and small. We've implemented the big guys, SAP, IBM, Oracle, and we also implemented some of the newer players, which I think are pretty compelling because they've had a chance to kind of build things from a clean slate over the last decade and not have to rely on this legacy of 25 years of a technology platform. And as you know, I think around 2000, 2005, we solved a lot of problems to move from a client server to a web-based model. And those problems behind us, the competition is no longer around who's fastest in the browser, who can go global, and so on and so forth. It really is around meeting the end user where they need to be met. So it's a fun topic to talk about, and I'm kind of excited to dive in here. So again, budgets, right? I mean, if you remember the old Jack Welch quote, which I'll probably butcher a little bit, the budget's probably the most problematic or broken process in modern day business, according to Jack Welch, right? So I think kind of a good starting point. I think we probably largely agree on that. It's a full room. It's not rocket science. The budget's a budget. We all know what the purpose is, but I think organizations struggle to make it a value-added process. So my topic really is around how do we make marked improvements as opposed to marginal improvements when we try to put new tools in place to solve the problem of the budget. So I'm a big fan of metaphors, similes, parables, you name it, good word pictures, right? So you think about, well, where do we start? Well, let's use sports, right? Everyone loves sports analogies, and they always work when you think about sports and business, right? So let's think about finance from an analogy perspective, finance and business, finance and sports. So first thought that comes to mind is accuracy. So it's archery. Well, largely it's more like skeet shooting, right? Moving targets, lots of noise, firing multiple barrels at one time. It's finance has challenges keeping things simple and linear. It's not a process that can be linearized, if that's a word. Second thing I think about is, okay, let's think about teamwork. Teamwork's important in finance. On their best day, finance is driven by great teamwork. So we think about football and all the execution of complex plays. It probably looks more like rugby, right, where it's kind of evolving, it's moving down the field, and it's a lot more chaotic at times than we'd like it to be. But my favorite analogy one time was using the analogy of NASCAR, where as finance executives or the finance organization, we don't have time to stop and rethink how things are done. We have to kind of keep moving, right? So you almost go through this annual process with a few pit stops along the way to try to fix the close process or fix the budget, but you kind of keep moving. Well, I got in big trouble with that one when I talked to a senior finance executive at a large company. She's like, well, when I think about NASCAR, I think about the crashes and the big ball of flame. And are you saying that's, I'm like, that's not what I'm trying to say here, but got myself in trouble. But I think the most apropos analogy or metaphor in sports is curling. You guys familiar with the great Canadian sport of curling, right? So you have one guy stands behind the line and he kind of has the big, the polished stone, and he kind of pushes it down the ice and has to stop in a circle about, 20 yards away. I have no idea. I have very little familiarity with the sport, but I know enough to talk about it at a conference. So he pushes it, and then there's a couple of folks with brooms, and they brush the ice in front of the stone to get it to land where they want it to land. Well, fundamentally, think about it, right? It's like largely, if they win the sport, they get the gold medal. The guy that pushes it gets all the credit. But frankly, all they do is push the stone. It's the guys with the brooms that do all the hard work. And frankly, in finance, when you set a budget in place, the person setting the budget really doesn't deserve any credit. It's the people who actually update the forecast and manage the business to meet a moving forecast to get the credit. I think a couple things that kind of come out of that is communication, clear communication, a language or assumptions that we all understand, be able to communicate back and forth on a really iterative basis and kind of succeed in a moving environment, which is probably where I'll try to use that analogy a little too effectively. But again, let's look at kind of where most of us find the budget in Excel, right? So I work with a number of customers, whether they're pure Excel or they might own one of the big packages. They still do a lot of work in Excel. Frankly, a lot of them will do all their modeling, all their math in Excel, and they'll consolidate through this big tool. And they'll say, oh, we don't use Excel, we use Hyperion, TM1, BPC, we use the big tool. We use that for our budget. Well, frankly, I think you're doing all the hard work in Excel, which means that all the intelligence and all the thought process isn't actually centralized. It's actually distributed in Excel spreadsheets on people's desktops. You get back to that old kind of like hit by a bus or win the lottery kind of model, right, which is always a challenge. And so the question is, why are we not getting beyond Excel? We all agree that it's not the best platform. Most companies, large and small, use it and rely on it heavily throughout the budget process, but there's no outrage. Why is there no outrage? I'll tell you why. Because what you're thinking right now is, hey, listen, is the grass really any greener? We have peers, we know people who leverage these tools well, but there's still not a big difference. There's not a big difference in terms of using the tool or using Excel. We don't see that real value add, right? I think it's a good point. So our goal as consultants who focus on finance is this kind of evolution, right, from scorekeeper to business partner, Financius troglodytes to Financius illuminatus, right? We want finance to be a business partner who's adding value in the process and not just trying to keep the CFO out of jail. Because I think a lot of times the CFO, the finance organization spends a lot of time just tying numbers, making sure they're valid, preparing reports, and polishing Excel spreadsheets, and not a lot of time with the business adding value. So if you're investing in technology and it's not doing this, it's a bad investment. So if we drill in, what does that look like? Well, simple slide with kind of one dimension. This is kind of the planning dimension of that evolution, right? What does it look like when you're just a beginner planner? Well, it's basic consolidated reporting analysis, moving up to good expense modeling. Hey, we really get T&E. We can model it out 5 years. We really know how many trips people go on and what their T&E expenses should be. Then you get to revenue modeling. Revenue modeling is a little more exotic because the drivers tend to be out there outside the organization. And then you get to this kind of this stage of driver-based forecasting. Everyone's really excited to say, hey, we do driver-based forecasting. And fundamentally, if you can understand costing and profitability, that is a function of planning more than anything else. Your ability to look at your products, customers, and understand what the transaction cost is. Thank you. So the question is, where's the ROI? So if I go spend money and I try to get up this curve of evolution, where's the ROI? Well, Hackett tells you that, hey, world-class companies who implement these big solutions are 2.4 times more likely to have gains, returns 2.4 times their peer group. And these guys basically score higher on finance value creation metrics. Well, what does that mean? Well, for starters, I think we could all agree that, hey, it sounds great to implement a corporate-wide budgeting tool. That's great. But is it worth it? Well, where's the finance value creation? How do you define finance value creation? Well, simply put, it's ensuring your investments have a greater IRR than their WACC, right? Internal rate of return, weighted average cost of capital. Simple, right? Well, it's not simple to calculate the math on a project-by-project or investment-by-investment basis. But simply, if you can look at your organization and find places where the projects aren't going well, the expenses are too high, or you're not getting a return on your revenue that's where you want it to be, that's where value creation is found. And that's not found in closing the books. Frankly, closing the books in 5 days instead of 7 does nothing for this, other than freeing up time for people to go work on these kinds of activities. But people don't think about finance around this definition around value creation. Why not? Because I don't think they have time to think about it, right? So let's dig into what that means. So when I looked at that definition, I said, how am I going to find some good examples of where that definition, what it really means? I went here. I went to the Corporate Executive Board CFO Research Study. I went to Duke's CFO Research Study in partnership with CFO Magazine. My apologies to Proformative if I missed their study. Wall Street Journal had a study, but all these studies come up with these things that CFOs really care about, their top 10 core concerns. If you go down through all these core concerns, very few of them have anything to do with closing the books. A lot of them, if you look closely, have a lot to do around planning. Risk management is assessing the risks in different areas and planning to avoid them, or planning to have the right capital on hand or insurance on hand to meet those risks. Cash flow forecasting, that's right in the words. Forecast accuracy, decision support. These are all forecasting or planning capabilities. They come from forecasting and planning. That's where value comes from. So if you want to do something that helps your CFO be more successful, it's focus on planning and budgeting. And frankly, try to get rid of the budget and move to more of a forecast paradigm. So back to this study, right? So those organizations, 2.4 times their returns, that's great. But there are a couple of catches. If you drill into that study a little bit, there are a couple of catches. And the one first catch was pervasiveness, was a critical success factor. Meaning that outside of finance, everybody used the tool, or pervasively a large percentage of people use the tool. And frankly, that's hard. It's hard to engage business leaders, general managers, product managers, sales guys to use a tool and use it pervasively. You know why? Because frankly, even the tools that are expensive, got 25 years of investments in them, look like spreadsheets. And they work like spreadsheets. And they function as spreadsheets. At the end of the day, people who think about sales and customers and products don't think about spreadsheets. They think about products, sales, and customers. So fundamentally, if you're going to be successful in pushing the pervasiveness, which I think is one of the key success factors, I agree with that here, although I think that the study kind of buried that in the results. I think you need to understand that the fact is you've got to speak business language, not finance language. Second, right, lack of accountability and lack of readiness. So people get thrown this new system, log in, you get a week of training, they jump on the system, and they're not ready. And they're not ready to make the switch from what they're comfortable with in Excel to this new model. Why? Because, again, they're learning a new language that is not on its face familiar. It's not business language. It's not self-evident. Raise your hand if you ever went to a class to use Google. Raise your hand if you took a class to use Kayak, wallstreetjournal.com. I can name it, right? The new business model is a cloud-based business model. It says you click on a link and you don't need to learn how to do it, right? Every one of my customers that's implemented, the big guys, you've got training that happens for weeks on end, right? Why? Because people don't necessarily think the way finance thinks. So what I really like about Accelerant, one of the big things, is Accelerant, that the team, Ted's team, has taken this tool and they developed it from an end user point of view, and it works from that perspective, and it understands the business in business language and business context. And I can tell you that now, but you're going to see it. You don't need to take my word for it. So let me get out of the way. So again, I think the key thing here is that if you don't hit these topics, if you don't hit the pervasiveness, you don't hit the accountability and readiness, you're probably just paving the cow path, right? You're taking Excel, replacing it with an expensive tool, but you're not really driving different process or driving value creation. So that's my fundamental argument here. So again, if you go back to the idea of how do I have marked success versus marginal success in rolling out a tool, I think we can talk about marginal success and say, listen, hey, you know what? Every tool you look at that's in a planning kind of budgeting bucket can do all these things, and they do it easily. But they advertise it. Hey, we have web-based templates. We have user-level security. We have task lists. We can consolidate results. We can report. We integrate with Excel, which is kind of a funny thing, right? So, hey, we know we're trying to encourage you to move off Excel, but one of the big features of our tool is you can go back to Excel, right? So I think that there's a catch, there's a caveat around Excel integration, and I think that with Accelerant, they handle it a little differently. So Accelerant's Excel integration isn't to allow you to go back to Excel to do your planning. It's allow you to report, right? That's a difference. But the key thing is that most of these tools will just empower you to go back to Excel, do your plan, and again, copy, paste it up to the cloud to consolidate. So what's marked success look like? Self-evident, business-driven process. So we're not finance-driven or accounting-driven, it's business-driven. Alignment of accountability and leverage. So that's a key thing, right? So if I'm accountable for a cost center, right, and I'm accountable for the revenue or expenses, and I'm going to be held accountable, my bonus is going to be based on it, I need transparency. I need to understand what are the metrics that are going to drive my success, what control do I have over them, and if I make decisions, can those decisions impact my results independently of all the 100 other managers in the business? That's leverage. Leverage says I can make a difference, right? And it aligns with my accountability. And lastly, integration. So one of the big topics that we like to talk about is the idea of integrated business planning, where fundamentally it's not integrated if it's not beyond finance, if it's not strategy, operations, and finance working together. How do you integrate it? And integration really is a bigger step, and I think it's one of the critical kind of mantras of the last couple years. The technology world right now is dealing with integration because they've solved a lot of the basic problems. So again, that's marked success is value creation driven through accountability, alignment, and adoption. So what does business-driven process look like? What does it mean to align it? I think traditionally the budget's driven by a hierarchy. So my boss gives me a budget. My boss drives my compensation, my raise, my bonus, and basically I do what I need to do to game the system, to put budget together to please my boss. But my boss is a finance manager or a product manager. I'm a product guy, he's a product manager, but our business isn't driven that way. We don't run a business in silos, we run it in process. We've got materials, we've got manufacturing, we've got sales and operations, we've got all the stuff happening on a horizontal view, and we have to integrate that way. And so I'm getting calls from sales and ops guys who are saying, I need your help. And I'm thinking, gosh, how is this going to help me hit my bonus? Because I know I'm supposed to cut expenses, but they're saying they need more money. So at the end of the day, we have to break this model, where all of a sudden the whole budgeting process and the accountability and compensation process follows the natural business process, right? Which is kind of a funny thing. It's true. I saw a couple of heads nodding over there. So again, I think the way you do that is, again, you have to align the drivers and the flow through the budget with the way the business process drives. Second one, right, the idea of visibility, leverage, and responsiveness. I won't dive into the details here, but visibility says, hey, what are my results? What happened last week, not last year? Can I look at my results? Can I get them back quickly? And can I understand where I swayed from the plan or the forecast so I can make course corrections quickly? If I'm empowered or able to make course corrections quickly, I very quickly throw my hands up in the air and just wait, kind of recognize there's going to be a big debate in the next budget process. Leverage, I've talked about leverage and responsiveness, right? The responsiveness says, hey, we're going to make an adjustment to forecast and watch the business change and report on those results very quickly. So that's the kind of, obviously, the linchpin to this whole idea of accountability and leverage. And lastly, I think just talking briefly about this integration here, you have to have an integration between these three things. The language has to be the same. You need a common language for strategy, sales and ops, and finance. And I think you might at first glance say, yeah, that's easy. It's not easy. Because frankly, the conversation around strategy and strat planning is usually a totally different language. It's a different process, different set of people on a golf course once a year, right, to do the strat plan. They throw it over the wall to the finance group and say, okay, we want you to do a bottoms-up budget, clean slate. Don't use history to kind of figure out your run rates, and it needs to meet our strat plan, which is basically a fool's errand, right? And then you miss it, and they say, well, you fix it. So they throw out the whole process they just invested in to get a bottoms up to the number. They throw it out and say, fine, just here's your number, we're going to give it to you. Because the people on the golf course, while they have a lot of industry expertise, they sometimes would choose wisdom and human intuition over the numbers. What they need to do is they need to have an argument with the numbers, with their staff, and say, I know these numbers tell this story, here's why my story is different, or why it's going to change. You can't ignore either one, right? Executives get paid a lot of money because they understand things most people don't. It's a whole Malcolm Gladwell, Blink kind of model, right? But fundamentally, they have to have a conversation around the same fundamental assumptions, which sometimes that fails to happen. So very quickly in closing, it's just talking through some of these areas where we see the value of integration. It's looking out further down the horizon, not a budget or 12-month view, but a further longer horizon. It's modeling. So it's looking at your drivers and modeling different scenarios in parallel, running 4 or 5 forecasts at once. It's translation from a detail to the aggregate, like we just talked about, strat plan down to the bottoms-up budget, having a common language, common assumptions. Integrated reconciliation process. So you have one process that reconciles actuals to variance analysis against budget and forecast, and it keeps the decisions at the lowest practical level. We always want decisions made at the lowest possible level in the organization. And lastly, I think improved trust, right? Trust is at leverage and accountability. The core of that is trust. We trust people to make good decisions, and we empower them with good information to make those decisions. And that's what kind of makes the difference. And so in looking at this whole topic of budgeting and planning and helping my clients to both pick, select, and implement the right tools, I think if we can start to kind of move towards this kind of marked improvement area, which really is integration, communication, common language, I think that's where you see a big difference. And frankly, I think working with Ted and his team, looking at their product, understanding where it's going, I think I'm a big fan, and I think there's a lot of promise there because I think they've taken this whole topic from a different perspective. And on that note, I'm going to hand it over to Ted. You sure? You got your way. Should you just hold that in, I think. Just hold that in. This one here. I think you just hold this.
You hear me? Well, thank you, Jason. My name is Ted Dacko. I'm the CEO of Accelerant.
I'm going to stand out of the way.
Thank you for coming here today.
I know where I'm going.
A couple of questions for you. How many of you do use Excel today for budgeting?
I know where I'm going.
Okay. Microsoft loves you. Okay. Can you hear me now better? Okay, thanks. Second of all, how many of you are interested in cloud-based computing, or at least not sure that you're interested in? Okay. Not quite as many of you. All right. Well, we are Accelerant is an organization that focuses on budgeting and forecasting and management reporting. We have a browser-based application. It can be run in the cloud. It can be run internally or on-premise hosting if you want to, so you don't have to go to the cloud. That's the extent of the commercial I wanted to do, but I wanted to make sure you understood that if you were interested in the product and you wanted to run it internally, you have to make sure you have the IT resources to support a web-based application, which is not a website. Just keep that in mind. So And if budgeting is a financial application, why are 90% of your users non-financial people? We always ask that question because finance tends to go off, select the budgeting system for themselves. And if you're trying to budget the strategy and trying to extract the best thinking of your department managers out there, shouldn't you be selecting the product for them and not for you? And that's, so while budgeting is considered a financial application, it really isn't. And so what we try to do is when we try to work with our customers, we try to show them problems that we've seen in the industry and show them solutions to those problems as we go forward. And this is normally what we see. When we do a discovery session with customers, and you can figure out whether this matches what you would tell me if we were having a private conversation. Everything's currently done in Excel. It's a cumbersome process. Need more integrities in the numbers and eliminate errors. I need ease of use and better user experience. Budgeting that makes sense to the budget holder. We're trying to type in numbers. I can't see how the budget ties to the strategy. I can't budget different accounts different ways for different department needs. We need something that goes in quickly. The GLs are actually the worst at the budget process. So if you're using Excel, you have at least evolved out of the ERP systems. Headcount planning is done in Excel. The workflow and approval process is just simply non-existent. I don't know when budgets are coming in. I don't know if they've been approved and blessed. I don't know anything about that process, and I can't do my variance reporting, and my reporting is inflexible. So you're in Excel jail. Most of you are sitting here, and what started off as a spreadsheet has turned into a jail for most organizations. And the people will say, but Excel is free. Is it really? Who has to build the macros, and how much did that cost? How much time is lost the day the budget is supposed to come in and it doesn't from a quarter of the departments? Who's going to track down and find out where those budgets are? And how much time does that set you back? Who has to manage those spreadsheets as they come in? What does that cost? And of course, your department heads always send the budget templates back to you exactly as you sent them to them, and they never make changes or additions or clobber formulas. So who's going to check that? Then you have to consolidate. Then you have to transfer those Excel spreadsheets into other Excel spreadsheets for reporting. And then the biggest mistake, and the one that you should be worried about the most, which has nothing to do with tying to strategy, but we have 4 customers now who have chosen Budget Pack because they submitted a budget to the board of directors that had errors in it, Excel errors, and had to withdraw the budget and explain to the board why they're running a mission-critical application in a dumb 2-dimensional spreadsheet that causes errors. So how do you assign an even cost to an error? So my other cartoon for you is this: you chasing Excel spreadsheets. Sometimes I feel like financial professionals would be better equipped if they were trained as butterfly chasers as opposed to financial professionals. Here's your ERP system. This is actually a screen from an ERP system budgeting screen, because what people don't understand is budgeting to strategy is not putting numbers onto a spreadsheet or into a field. It goes beyond that. So budget heads, department heads fear the budget process, and they're looking for something powerful and easy, and that's what we're trying to solve for them. Because what good is a feature in a budget system, as Jason just said, if it can't be used by the average user? And you're not going to get them to budget the strategy if they can't use the system. Now, your thought is, I'll go off and do an RFP. So what is an RFP process? It is a collection of meaningless features that will never be used, that may never be able to be implemented, that has nothing to do with budgeting the strategy and focusing on the user of the budgeting system. We did a survey about a year ago, a little over a year ago. We had 250 respondents from organizations as small as 75 million all the way up to tens of billions of dollars. And we were curious as to what their complaints were about the budget process, and from 3 constituents: the senior executives in the organization, the CFO, controller, budget manager, and finance staff, and then the department heads. And we were interested in tying those results together. And this is what the survey said. The number 1 complaint of senior executives in the organization is the budget doesn't tie to the strategy. Now think about this. The budget's job is the next 12 months operational plan of the strategy. If it doesn't tie to strategy, what the heck good is the budget? Your process takes too long, finance. The numbers are not reliable. I don't know that the department heads are putting the time in. I don't know that the budgets are being approved or reviewed. I don't even know if the numbers are right, and I can't get my questions answered fast enough, so the process is basically not very valuable to me. Finance department says, well, wait a minute. The department heads hate the process and they don't put enough time into it. The mechanics take too much of my time now because I'm managing all those manual spreadsheets and checking for errors, and I don't want to be an Excel programmer anymore, and I'm tired of department managers trying to change those templates. And the department managers will say, well, wait a minute. The problem here is the budget template does not let me budget my department the way I think about my department. It's a two-dimensional spreadsheet with a chart of accounts going down the page and time periods going across the page. That's not a value-added exercise. That's not the way I think about my department. Your system is too hard to use. The process is too complex. The process is not fair. And what does the purple wedge say? That's not my number, which I'm sure you've never heard before in your organizations as well. So what we try to show organizations is how to tie the budget to the strategy of the organization. Incidentally, there has to be a strategy in the organization to start with, so that's a CEO role. But nonetheless, tie the budget to the strategy, shorten the process, make the numbers more reliable, and answer budget questions quickly for the senior executives. For finance, get greater participation in ownership from the department heads. That's your number one goal. Your number one goal is not to have a list of meaningless features and functions that cost you a lot of money and took you a lot of time to implement that don't do anything for you. Your goal here is to empower the people that you need the thinking from, get you out of the programming business, and improve communications throughout your organization. And for those department heads, the ownership of the numbers, not make it complex, keep it very simple, and let them budget the way they think and provide visibility into the process. If you don't budget to strategy, what do you budget to? You budget to politics or you budget to history. Those are your only two choices that I can think of. Politics means I'm really not supporting the CEO strategy. I'm going to do what I want to do because I don't agree with it. And budgeting to history and politics, or to history, can be even worse because I'm just going to do what I've done in the past and I don't want to change. I was running a healthcare technology company a couple of years ago. We had a strategic planning session, took the team off-site. We came up with what I thought was a really interesting strategy for how we were going to grow the business over the next 5 years. We came out of that process. We went into a budget process. I got the budget from those same department heads, and it looked like last year. And I said, get out of here. Just get out of here and redo the budget because I want to see a budget that's going to tie to the strategy that we just built. I don't want to see something that's tied to last year. So very often this is what we'll see with a strategy in an organization. Very simple. We're not looking for a 400-page strategic planning document. What are the 5 to 7 things that we're trying to do as an organization that are going to shift our priorities or take us in the direction that we need to do? You know, focus on new product innovation, focus on staff development. I want to improve use of technology automation. I want to retain my key employees. I want to improve my margins, do more with less. Just 5 to 7 bullet points is all you really need for a good strategic direction for how you're going to achieve the plan. And then you need to put a budget together that talks about that. Now, here are some ideas for how we can improve, ideas for how you budget the strategy. First of all, as I said before, you better have a strategy. If your organization doesn't have a strategy and you can't boil it down to 1 or 2 pages, you're probably not going to be able to budget to something because people don't understand it. Focus on the needs of the department's heads. Jason talked a lot about this, and I don't mean to turn this into an Accelerant commercial, but I'm going to anyway. What we've done that's different than all the other vendors out there is we've built a budgeting system that emulates TurboTax, not budgeting. Now think about TurboTax. TurboTax is designed for a non-tax accountant to do their tax preparation. If all we did is we put the 1040 forms online, that TurboTax would not be a popular product. And the other thing to stop and think about is, so it's very, very useful for the people who want to use TurboTax. Is it useful for a tax accountant? Sorry about that. So you have to choose an interface that's designed from the lens of your department heads, not from your own lens, or you're going to make the mistake of buying something for who? You, and not your users. And if you want to extract the best thinking of your department heads in the to develop the strategy and tie the budget to the strategy, you have to have a user interface that ties to their needs, not your needs. Now, that doesn't mean you have to sacrifice functionality, but the first thing that we say is we walk in and we show the user interface, and it looks like TurboTax, and the finance people go, but it's not Excel. And I say, didn't you want to replace Excel? Yeah, I wanted to replace Excel. So why do you want it to look like Excel? Because that's sort of defeating the purpose. So this focus on the needs of the department heads and their functional and usability needs is very important. This third aspect is also very important. The days of submitting and approving numbers in budgeting is over. People want to see plans. They want to see my strategic initiatives and how they tie to the account structure and what I'm doing. And what happens is these large, complex products that you can buy allow you to do that if IT or finance is actually maintaining all these initiatives in the background. That doesn't work. You have to let the department heads define their own projects and plans on their own terms, tell you what accounts they touch, and then how they're going to budget using those accounts to those plans, but leave it to their control to be able to do it. And then you can start budgeting the strategy, because these plans and actions should support the strategy, not the accounts and the numbers. Does that make any sense to you whatsoever, what I'm saying? Okay, good, very important. Extremely important cost of process. You have to justify all revenue and expenses with documentations and supporting detail. Simple process, not so easy to implement, but every time you submit a number, or almost every time you submit a number, you want an explanation for that number behind the scenes that's readily visible to whoever has to approve the budget and who wants to see it up the line. So attaching the note or the justification or the supporting detail, whatever, to that number is extremely important to budgeting to strategy. Focus on organizational communications as well. Budgeting, I'm going to say this twice, budgeting is as much a communication process as it is a financial one. Budgeting is as much a communication process as it is a financial one, and sometimes it's even more. So choosing a budget methodology that supports that communication process is essential to budgeting to strategy. You have to support situational budgeting. What do I mean by that? We were talking to a college and university earlier in the day. The way the math department budgets an item is not the same way that the football team budgets it. And the way the football team budgets it is not the same way that student housing budgets it. And the way student housing budgets it is not the way admissions does it, which is not the way alumni relations does it, which is not the way a library does it, etc. Situational budgeting allows for each department head to budget every account and every project in their organization the way they think about it, not the way you think they should think about it. So that's what situational budgeting is all about. There needs to be a review and approval workflow to make sure that all the budgets have been approved in the chain of command. So as a budget is submitted, if I'm submitting a budget as the let's say the brochure department or the website and the marketing department, I want to make sure that it is approved and blessed by the vice president of marketing. His or her thumbprint is on it, so that as you're advancing the budget up the line, people are assured that these plans have been reviewed and approved, and that people are putting the proper eyes and attention on it. Support practical what if. Jason talked about modeling, and we could talk about that if you want. What we have found is what if is not really a generic capability. The primary purpose of what if in the budgeting process is when you're looking for that last $70, $80, $90,000, trying to search the couch for quarters and dimes and nickels to come up with what I need. What if I delayed all my hires 1 month? What if I didn't? What if I gave people a less of an increase than was recommended, or I delayed it by a month? What if I cut my discretionary expenses by 2%? So there's some practical functionality that can be woven into the budget process for those department heads so they can play the what-if games on terms that mean something to them, not large equation-oriented what-if capabilities. Support anytime, anywhere budgeting, which is why we have evolved the company to cloud-based computing. What's to say that it's not the budgeting cycle in a couple of months and I'm sitting here at the Marriott at the conference trying to do my latest budget submission that the finance department needs. We're doing iteration 7, and I have to go up to my room and do that. So one of the primary values of the cloud-based computing capability is anywhere, anytime budgeting. And people will say, well, I'm worried about security because, in budget process, not only do you have our financial information, but you have employee level detail salary information in there. I can't help you with security except to say what every other software vendor who's done this says. This is our business. If we screw up security, we're gone. Trust me, we have thought this through in as much detail as we possibly can to make sure that you're not going to have security issues, or next year you'll be talking to a different group of vendors up here. So we've thought this through as best we could, all of us. No programming. Jason talked about that. 100% of our customers that we have came from Excel, except for 4. And those 4 couldn't get the big guys to work because it took too much cost and expense to make those big multi-dimensional systems work. And they basically gave up and said, I want a product that will go in on a parameter-driven basis that can go in 4 or 5 weeks that my users can use. And yes, we are going to do training. We're not going to be like Google, or we're not going to be like the Wall Street Journal where people are going to pick it up and do it. We are going to provide some training, but the basic training for a budget holder should not be more than 30, 35 minutes. And if they can't get it by then, you screwed up and you picked the wrong vendor. And then the last point is avoid the RFP process. As we talked about earlier, the RFP process promotes a checklist of useless features, and when we see an RFP as a vendor, we run away because we know that this is an organization that's using 1980s and 90s methodology to choose a 21st century product. So, thank you. I think what we'd like to do is we'd like to use the remaining time to take any questions that you have, so please address your questions to either Jason or Rob. Questions? Yes, sir.
You emphasized connected strategy. What is that?
How we connected strategy to the budget process. I think the best answer to that is, I don't know how to say it a bit differently than I did before. You have to have a strategy, and then you want to make sure that people are submitting plans that they can justify as tying to the strategy, not to what they've done in the past, and why this is going to support the strategy, how and why this is going to support the strategy of the organization.
So how does your product?
Well, I'm not going to show you a product demonstration right now, so that was something I would have to show you at a product demonstration, and I don't want to bore you folks with technology today. Yes, sir?
I know you didn't want to turn this into a product demonstration or a sales pitch, but is it fair to say that Accelerant has the capability to do a lot of the things that you talked about?
It better.
That's a fair answer.
Yeah, I'll tell you something. I'll say something that software vendors sometimes don't say. We are an imperfect product, as all products are. We don't do everything that people want to do, and we don't do everything people want to do the way they want to do it. But we think we're a pretty good solution, and we think that this is a strength of the organization, empowering the user and helping them budget the strategy. But you know what? In your mind, you might have a very different model of how that should work, and we may or may not be a good fit.
Right, and my 2 cents on that is, if you look at the big vendors, like the guys who are got the most money behind them, and the more money they spend, it more becomes a Honda Accord versus a Toyota Camry, right? the end of the day, you're going to pick one, but feature functionality, it's going to go for 150,000 miles. It's never going to need a maintenance. It's just a great, stable car, right? But so fundamentally, all those features are all merging and converging on another. When I first looked at Accelerant, I was like, oh. And I've seen 8 or 10 different mainstream products. I've implemented a lot of them. Accelerant is a different point of view. It's looking at the same problem from a totally different point of view. And I would echo what Ted's saying about they really put pen to paper on the topics that he's bringing up are key differentiators. So take a look at the booth.
And if you're interested, just go to accelerant.com and you could register for a quick demonstration. We don't show all the functionality there, but you can see a quick demonstration. But again, I don't want to turn that into a product demonstration here today. Yes?
I love the idea that the two ideas together about how budgeting is about communication, tied to strategy, and also how effective budgeting involves communicating in different ways that people think. My question is, when you say how different people think in different ways, do you mean not to be tied to a particular chart of accounts across different areas, or are you talking about a visual thinker versus a kinesthetic thinker versus a quantitative thinker?
Probably neither. First of all, you have to have a chart of accounts, right? And everything has to tie to some chart of accounts, so that everybody can't be, well, people can be on different chart of accounts, and they could be budgeting 2 different accounts, but ultimately it has to be a single chart of accounts.
Well, right.
In terms of a different kind of a thinker, I think what we're saying is this concept of situational budgeting that puts the logic behind how you're going to prepare that budget for that account or that program in the hands of the user rather than forcing them into a methodology, or worse yet, what Excel does, just enter numbers into months, which is a worthless exercise to me. Does that make sense?
No.
Okay.
I don't disagree, I just don't understand what you said.
Okay. Can we take it offline?
Sure.
Okay.
A simple example would be Christie's, the auction house in New York. When they think about budgeting, they say, okay, how many major sales we can have every year? How many large works of art are we going to sell at each sale? And they think about it from a sale perspective. They think about their sellers and buyers. And yeah, it's how they see their business, right? And so, the example of athletics versus student housing, right? How many students, or how many scholarships, et cetera, et cetera.
Yeah, maybe an example might be some account. Somebody wants to budget it by number of people in the department. Somebody else wants to budget it by a % increase from last year. Somebody else has a model underneath it. Yeah, okay, great. Thanks. Yes?
We mentioned the silos concept and budget in terms of historical. My question is, how do you budget for something that are dependent on natural disaster or regulatory driven business-based concept? And the other question is, in terms of silo, how do you break that so that people are not protective, that we actually work in a more flat rather than hierarchy approach?
Right, and I think I'll answer the second question first, which is how do you get people out of silos and how do you have an integrated horizontal process? The first job is that CEO has to be an effective communicator of strategy down to the level of understanding drivers, cause, and effect. And so listen, hey, we're going to grow revenue, and we're going to do it by X new customers, X new product lines, and those drivers often get lost in the process on like step 2 or 3, where step 10 is now when you have product managers looking at the fundamental baseline assumptions of the plan. Those drivers need to go all the way down to the lowest level of detail, so people are thinking in the same language as the strategy is conceived. So for starters, and the first question was around, what was your?
Around budgeting. How do you budget for something that you can't predict?
Oh, right. So yeah, you can. And so what typically do, you take history, right? History gives us a great insight to seasonality, to how people spend money, and it smooths things out. And so the best way to start is basically, hey, listen, we need to go manage as if there's no disaster or no big peak or big valley. And you build a plan based on natural seasonality, which is the one value history has, is it does give you insight into what was really spent and how it's seasonal. The second thing is then you go back and you look at your risk management model, because risk management should be part of the strategy planning or budgeting process. And you say, okay, let's look at risk, let's look at the cost impact of risk over history, and put a plug, essentially a plug in there for the risk management, which is exactly what you think about an insurance company, how they do it, and it's fundamental to their model.
Another point which has nothing to do with what you just said, but I just sort of popped into my head. The system, a budget system is not like a general ledger system. If a budget system can't go in easily and quickly in 4 to 6 weeks, it's probably a waste. And now, the other thing is, many companies do not implement their budgeting system for the budget cycle. They implement the budget system for the forecasting cycle, which follows the budget cycle, because it can be used for monthly or quarterly forecasting. The other thing is the budgeting system can be used for management reporting, which happens any point in time in the year. So if you're sitting there thinking, well, it's the end of August, my budget process starts in September, I'll talk to you next year, that's a fair point, but that's not necessarily the way to look at budgeting, because it can be implemented at any point in time because it's a versatile process. Other question? Yes, sir.
Can you talk about how allowance for capital allocation and maybe cash flow considerations?
Sure. We do capital first, the whole thing?
You go ahead.
Sure. I think when people think about doing a budget, they always feel like they've got this kind of intimate, kind of ironclad relationship between capital planning and the budget, which fundamentally is not true. So most organizations that do it effectively do a separate capital planning process, right? So capital planning process should be 3 to 5 years, because most of these projects take more than 1 year, and you have a better picture of that. And so at the end of the day, there's just basically this natural break in the process, which goes back to integration. How do I move data back and forth very seamlessly to hit both my balance sheet and my P&L? Cash flow planning is a difficult thing. I mean, cash flow planning is really, really difficult to forecast, and usually that's not going to be handled in the traditional budget process. Largely, I think if you can get an organization to do a corporate budget that actually has a decent balance sheet, you're in great shape. That's even a little bit challenging. But I think in general, that cash flow forecasting and cash flow planning process needs to take inputs, but is probably done by 2 or 3 people and probably needs to be done as a separate process.
Could be done in Excel.
That could probably, right? I mean, most organizations don't have enough moving parts to do it outside of Excel.
It is a little different than the answer than the question that you asked, but what we're trying to accomplish at Accelerant is basically, your fixed asset system understands your runoff depreciation very, very well, but it has no idea what you're planning for next year.
Right.
So in the budget process, you can set up an asset catalog, which allows your department heads to request assets as part of the budget process, and the budget process should do 2 things for you. One, it properly accounts for that so that you are populating the budget fields in the fixed asset system with the right numbers. Should this be depreciated? Which depreciation method should I use? Should it be amortized? For how long? Should it be expensed? More importantly, the role of the budget process, not in the capital project, but in the fixed asset process, is to keep track of which assets were requested and approved so that you can negotiate good purchasing agreements with vendors. And 2, the people who need to deploy those assets next year know who needed and requested what, when, and when it needs to be deployed, so that all of that is already prepared by your budget system, so your IT department or whatever department you're talking about doesn't have to say, reinvent the wheel as part of that. So anyway, it wasn't not exactly your question, but it triggered a thought. Other, yes?
Question. So how often would you suggest to reforecast, or what would trigger you to reforecast?
So my school of thought is that the forecast should be the basis of planning and communication. It should be done monthly. And what the key question is not so much how often do you forecast, but what drives you to really change your forecast. Because I might have a very stable cost center department business unit that is running perfectly as planned. You need to get a language around material variances and what drives the material variance, and have some language with management that says, listen, I need to sign off on my forecast every month. However, I'm not going to make any changes to it unless I believe there's a material variance to the plan. So that pushes management back. It kind of creates a little bit of space. So you're giving people the accountability and autonomy, but you have some kind of triggers. Like typically it's like any spend over $25,000 and any change in headcount would be material.
And then marrying together the actuals as they come in with the latest version of the budget or the forecast, and then choosing which method do I want to use. Do I want to freeze the total and respread the remaining months, or do I want the actuals to simply override the budgets and then allow the actual year-end total for the forecast to change? All of that should be woven into the budget and forecasting process as well. We have 1 minute, so probably time for 1 or 2 more questions. Yes, sir.
Number one, thanks. This session has been great, very refreshing and energizing. My question is about budgeting, the situational budgeting, how do you break, how do you go for implementation? So would you talk to the different departments themselves, department heads, to break that or to establish that channel of communication between you who understands the product and know how to parameter the product, or do you talk only to the accounting team? How do you go about implementing the tool?
It's a good question. The question was, how do we go about implementing the situational budgeting? But it is a conversation that you have with the finance team and probably a select group of users as well, and make sure that we have the functionality already woven into the system, and then just making sure that they know how to apply that functionality to do that situational budgeting. But we also want to know things like, okay, which accounts are, may not be situational. They're not discretionary accounts. They might be allocated accounts, or they might be calculated accounts, or they might be certain things like that. But that's a dialogue and a discussion that that any vendor would need to have with the accounting department to make sure that you're matching the needs of that organization. Are we out of time? We want to thank you very much. We're standing here between you and lunch. I understand it's really good, so thank you.
Thanks.